Welcome back to another Monday Market Update. My name is Brad Lupkus with Frontier Bank Wealth Management and Trust. And here's what the markets did last week. Last week, the U.S. markets had their best week since early April as investors reacted to the increased likelihood of a divided government as a result of last week's elections. Now, what that means for us as investors is if Joe Biden is certified as the next president of the United States, and if Republicans hold on to control of the Senate, what that really means is that not much is likely to change over the next 2 years. It's very unlikely that we'll see any immediate tax hikes or new regulations, but it doesn't remove the possibility of a new fiscal stimulus bill getting passed in the House and Senate and eventually signed by the White House. So overall, a very favorable week for the market. The S&P 500 last week jumped up over 7.25%. That brought its year-to-date numbers into double digits for the year. It's now up 10.3% for the year. The small cap index, so small companies here in the United States, that index was up almost 7% last week, bringing its year-to-date numbers into positive territory. It's now up a little over 1% for the year. If we turn our attention to the international markets, there was obviously no election that took place overseas last week, but markets reacted favorably as well to the election here in the United States. The developed market index, for example, was up over 8% last week. That index is still down for the year, but it's now only down about 3%. The emerging markets index last week went up over 6.5%, and year to date, that index is now up 7.85%. Now, obviously, the election was what dominated all the headlines last week, but there also was some pretty noteworthy pieces that came out in other areas. For example, the Federal Reserve met last week and really just reiterated something that we've known for a while, and that is that these low interest rates that we're seeing right now, they're not going away anytime soon. We're going to be stuck with these low rates on CDs. Although if you are a buyer, if you're buying a home right now, mortgage rates are quite attractive with these low rates. But they're not going away anytime soon. We're going to be seeing these low interest rates for the foreseeable future. We also got some really encouraging news on the jobs front. Last week, the jobs report came out, and what it showed is that the U.S. economy added 638,000 new jobs, which is better than what was expected. This lowered the unemployment rate from 7.9% down to 6.9%. And to really put some of this into perspective, if you look at back in the spring, at the lows of this pandemic, 22 million Americans lost their jobs back in the spring. So far, the U.S. economy has recovered 54% of those jobs. And really that illustrates two things. For starters, it certainly illustrates that we have a long ways to go. We have a long ways to go before we get back to where we were at pre-pandemic levels. But it also illustrates just how quickly the U.S. economy has rebounded from the depths of it where we were at back in the spring to recovering over half of those jobs just 6 months later is a pretty incredible feat. And hopefully, as we continue to get positive news on the vaccine front, we obviously got some pretty encouraging news on that this morning, but as that continues to come out, hopefully the economy can continue to rebound and we can get back to where we were pre-pandemic levels. Thank you again for watching this week. If you do have any questions or comments, please leave them below, and we'll see you next week.